Hello traders, Gary Wagner here for Trending Markets, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, April 5th, 2016, and we're looking at a Dow Jones Industrial Average under pressure, trading off about 135 points on the day. That, of course, affects a trade in which we did get stopped out of, which is the Standard & Poor's 500 vis-a-vis the E-mini, currently trading at 2037. The low is 34 and the high on the day is 2055. We did have stops right around 2040 on today's show. We'll talk about that trade along with what our expectations are for the market in the upcoming weeks ahead. So traders, we're absolutely looking at a market under pressure, currently trading off about 18 and a half points. It did come and hit our stop today. We were in at 46, out at 39, which is right in here. Our stops were just below 2040 for a loss of 7 points. I apologize for that loss, but here's what I believe at this point. I think we're going to see some substantial opportunities in the market, and this is the way that I'm looking at it. We certainly were not able to overcome the resistance of this former top. If you take a look at this high right in here and match it to this high right here, you'll see that they're pretty equal. Also, yesterday's lower close gave us a pattern in terms of candlesticks simply called a dark cloud cover, and today we're absolutely getting confirmation of that particular pattern. You've got a red candle with a lower low and a lower high. Now, that being said, what I've done is I've put in a basic fib retracement. Let's assume that this tremendous rally, and we profited very well from this rally. Overall, on the last 4 trades that we've done, we're up substantially on our trades here. And when we look at this rally, a substantial rally from what, about 1800 to 2080, so a tremendous move up. Now, assuming that we get a real correction in the market, we've added a fib retracement, 1271, 1802 on the bottom. And in terms of important areas, well, the first area you come into is a 23% retracement. That comes in at 2008. And then below at 2003, that's our old retracement. That's the retracements we've been using from here to here. So what we want to look for is what we call a harmonics. And on the harmonics, what we're really looking for are 2 different time cycles that come to the same conclusion. And we get that with a 38% retracement and a 50% retracement at 1970. So you can see that this lines up almost to the numbers 68 and 70, very, very close, but lines up to the numbers. And so my sense is if we do go into a correction, we'd want to see, of course, if the market can genuinely begin to sell off and it actually gets to 2003, how it reacts, because if it goes through this particular area here, the next real area of support doesn't come in till about 1970. So that being said, my sense is right now that we'll probably want to initiate a short position in the market. The only real caveat to this is when we look at this 2008 right in here, and then you look at our 200-day moving average, they kind of line up right in this area. And because of that, we could have this market genuinely only sell off to here and then move up. The other possibility, of course, is that we're looking at a very, very shallow correction, the kind of corrections that we have been getting in this market. In other words, we had this market spike up, little sideways, spikes up, goes sideways again, it spikes up, and here you get that 2-day correction, similar to here, similar to here, and similar to here. You get that 2-day correction, and that's followed by a spike. You can see correction, spike, sideways. So we haven't gotten real corrections in this market since the beginning of this rally, which really began, February of this year. So what we need to determine right now, most importantly, and that's going to determine what side of the fence our next trade is on, is whether or not what we're looking at is another one of these short corrections here, or if something fundamentally has actually shifted that would cause this market to actually go into a full-blown correction, which would, as I said, take it anywhere between 2008 2003. That's our first rung on the ladder, so to speak. And then just below it is 1970. This has been Gary Wagner wishing you all, as always, good trading. We'll talk to you tomorrow for another Trending Market.